So this is just a recap for day 37 and the end of live stream 31. So here on the recap for day 37, let's just have a look back at what happened. We'll put our executions on. There we go. So we had the market pretty much open up close to that 145, which was a key level previously identified as marked out here in blue. Had the market struggled to get above it, pulled back, retested it, as we can see, wicked through it and closed below it and continued to sell off. Market had gapped down about 94 points. It's about nearly 0.5% or so. What I was looking at was I wouldn't want to get into the market too early. I did get a CF10R signal fairly early on. So we had one on the opening bar, had a second one on this bar here, but I wasn't at the charts and I wasn't going to take the signal so early on, so price came down. Speculated that we might see a move down towards 18,040, as it's been a key level for a couple of weeks now. We didn't break down to there though. Buyers came back into the market, came back through that 82.75, had this bit of a consolidative move to the upside here. We had VWAP in around this area as well, so price was hanging around this area for quite some time, building volume. Eventually we saw the breakout, didn't actually have a CF10R signal set up. Saw the pull back into the range. We speculated we could find support here, especially as we saw the wicks. But eventually we closed inside of the range, inside of this high volume area, broke out of it to the downside, didn't head down to the lows. Instead we put in a higher low, pulled back, and pulled back from there. Couldn't head higher. Again, broke the lows by only the wick. I saw this candle. I thought we may turn around, but I wasn't sure, wasn't confident. The reason I wasn't confident was because of we've got a high, it's got potentially lower highs, even though we have a higher low here. I thought, well, prices are rejecting off this 82.75, so there is a possibility of going lower. Did like that candle potentially for a reverse, but I wasn't confident in it, so it wasn't part of my strategy, so I wasn't going to take it. What I did eventually do was I decided to start using my 6F strategy, and I started to use that early. The strategy is not supposed to be used until around about over here, which is about 11 a.m. Eastern Standard Time. Due to the market coming into a bit of a range here, also seeing that on the VIX market did seem like it was having a bit of a turn. So looked at the VIX chart. The VIX chart did seem like it was having a bit of a turn. So came in, poor risk reward on this trade. It hit target, but it had poor risk reward. So I came in. Target was hit pretty quickly. I then went long based on this candle here, using that 6F strategy again, using it a bit early on, and so the target would have been, I believe the target was up at 12. As prices went, I was a bit concerned about these highs and this bearish area here that was a high, so decided to adjust my stop to break even. As you can imagine, price came down, hit my stop for break even and went to the upside, would have hit my target, would have been done for the day. But now I was still back in the day because I allowed the trade to come back and hit my break even. So there's the entry, there's the exit. Came over here again. I went short again. It's a bit early, and that was primarily because I saw strong volume going into this 45 level. That's been important for a couple of weeks. It's even been important this morning, showing that it still has some relevance. And what I saw was this fairly strong bearish candle out of the area. So I decided to go short, looking for a move down towards where that session VWAP was. The electronic trading hours VWAP, which is this line here marked out in blue. Looking for a move down there. Prices came within about 2 ticks, adjusting my stop to break even. I thought my take profit would be inevitable, and prices came back and stopped me out for break even there. So in reality, I should have held a position. Eventually, as you can see, the price would have hit target. Was poor risk reward on the trade, but it would have hit target. So made the same mistake over here, adjusting stops to break even and allowing the trades to work as designed. This trade, we got in, the target was all the way up here, around at 45, but I decided to get out. Price went up quickly, seemed to be, had really good risk reward on this one actually. I think I was using 3 points of, about 3 or so points of stop, and I was up over 10 points at one point, I believe. 10-12 points. So I was better than 2 to 1, nearly 3-4 to 1 on the trade. So eventually closed as we pulled back a little bit. On this trade over here, went short, and it's meant to be off this bar here. Went short, and that's based on the 6F, and I decided to just take profit as prices came. Well, I didn't decide to take profit, I didn't adjust my target, target would have been down here at 07, around 06, 07, around its previous highs, but price came down quickly, hit my target, and so I was taken out. As you can see, prices would have likely would have stopped me out, so that would have been a losing trade if I would have kept it. If I would have kept it, it would have been a losing trade. So in fact, the target being hit quickly, not where I wanted it, actually worked in my favor here. So that was fortunate, and that's where I decided to end it today. Decided that it was enough trading, so I decided to end the day there. There was a little bit, to be honest, I wasn't all too confident taking a short, especially after this move up, but strategy said to go short, stop was there, and it would have likely have been, I would have been either closed for a loss or would have been stopped out. And that was pretty much it. So we'll have a look at the trade performance here. Let's generate. So we'll just bring the trade performance into view, and here on the trade performance, as we can see, these are the trades I took based on the entry time. Where's it got the entry time up there? That was based on the entry time, so these were there we are. So that was like 1 hour after market open. That would have been what, 10:34. So between that 10 and 11 period Eastern Standard Time, that's when I took all the trades there. And as you can see, there's the equity curve. Didn't actually suffer any losses. If we look at the 30-minute, half an hour, you can see they're all taken 1 hour after the market open. It's around about 10:30. We'll look at the summary page. Again, there isn't really much here because all the trades were positive. So 99 profit factor, there's our gains, there's our commissions, 100% accuracy, average trade, average winning trade. So those break evens brought down the average trades. Those two break evens, which were about 1 point or a bit less than 1 point, would have brought down the average a fair bit, largest winner, and so on. So that pretty much just wraps it all up there. So think that pretty much summarizes today, and thanks for watching.